There's one fund in the world that holds a huge amount of money and power. It owns shares in around 9,000 companies across the globe. It owns expensive real estate in top cities, and it earns profits from countries and businesses it has invested in. But what's even more surprising, this massive fund is controlled by just one country. Is it the US? Maybe China? What if we told you it's a small country with only 5.5 million people and a lot of snow? We're talking about Norway, and let's see how this quiet little Scandinavian country holds so much global power and why most people don't even notice. Norway is known for being one of the happiest, richest, and most peaceful countries in the world. Back in the mid-1900s, Norway already had a good economy. It had been stable for almost 150 years after the Napoleonic Wars, with the exception of World War II. At the time, Norway's economy was mainly based on timber, fishing, and growing industries. But then something big happened in 1969, something that changed the country forever. Oil companies believed there might be oil under the sea near Norway. In 1967, a company called Esso found some oil at a site named Balder, but it wasn't worth the cost to extract. Then in June 1970, another company, Phillips Petroleum, struck gold. Well, oil, and not just a little. This was one of the largest oil fields ever found in the ocean. It was called Ekofisk. By June 15, 1971, they had already started drilling. But here's the big question. Would this oil discovery only benefit the foreign oil companies? Even before this discovery in 1963, Norwegian leader Einar Gerhardsen had made a smart move. He declared that the Norwegian government owned everything under the Norwegian part of the sea. So any oil or gas found there would belong to the state, not to foreign businesses. The people of Norway clearly supported him. He went on to become prime minister 4 times, making him the longest-serving non-royal leader in Norwegian history. Foreign oil companies still got to make money, about half the profits in fact, but not all of it. Norway wanted to keep control. To do this, they created their own national oil company called Statoil, now called Equinor. This means Norway, not outside corporations, manages its oil and other energy resources. Norway also made another smart rule. The government would get a 50% share in every single oil project. That way, if oil was being taken from Norwegian waters, Norway would get rich too, and so would its people. Fast forward to today, and that smart planning has turned Norway into a quiet global powerhouse. A country that owns pieces of the world's biggest businesses and still stays mostly under the radar. Even though Statoil has changed over time and is now partly private, the money from oil still keeps pouring in. How much money are we talking about? As of December 2024, Norway's sovereign wealth fund had about 20 trillion Norwegian kroner. That's around $1.8 trillion. And remember, this is for a country of just 5.5 million people. For comparison, the US made about $244 billion from oil in 2023, but the US has 61 times more people than Norway. The Norwegian government then made another smart move. They didn't want their economy to rise and fall with oil prices. They also wanted to avoid the resource curse, a problem many countries face when they discover valuable resources like oil or gold. This curse often leads to corruption, inequality, or political instability. Sometimes it causes all three. Wealth ends up in the hands of a few, governments become less democratic, and foreign companies take the profits. But Norway had 2 big advantages. It was already a wealthy country with a strong democracy. So, the government found a clever way to turn oil wealth into long-term national benefit. They created the government pension fund. Don't let the name fool you. It's not just a retirement fund. It's one of the smartest and richest financial setups in the world. There are 2 parts to it. One focuses on investments inside Norway, but the real powerhouse is the Government Pension Fund Global, or GPFG. The GPFG is managed by Norway's central bank and guided by the Ministry of Finance. But it's owned by the people of Norway, and it's huge. This fund owns small shares in over 9,000 companies across the world. It's the single largest investor on Earth. About 70% of the fund is in global stocks, 25% in bonds, and the rest in real estate and energy infrastructure. It owns major stakes in companies like Microsoft, $41 billion, Apple, $35 billion, and Nvidia, $34 billion. It also invests in Amazon, Google, Alphabet, Meta, Tesla, ExxonMobil, JP Morgan, and more. Thanks to smart investing and a boost from rising gas prices after Russia invaded Ukraine, the fund doubled in size between 2019 and 2024. Today, it earns about 6.3% yearly, better than most hedge funds on Wall Street. The total value now equals about $321,000 for every Norwegian citizen, including children. Norway doesn't just invest and wait quietly for profits. It actively takes part in how the companies it invests in are run. It votes in shareholder meetings and helps influence company policies. Experts at Tufts University say Norway's wealth fund is one of the most open and well-managed in the world. The fund has clear values, and it votes according to those values in the companies where it holds shares. So why doesn't Norway's sovereign wealth fund get the same attention as the funds of Kuwait or Saudi Arabia? Norway's fund is actually much larger, worth around $1.8 trillion, compared to Qatar's $526 billion, and even more than China's $1.35 trillion. One reason may be transparency. Norway publishes detailed information about where the fund's money is invested, how much it owns in each company, and what level of voting power it has. This openness reduces public suspicion and keeps the fund out of the spotlight. Another reason is credibility. Norway's fund is widely trusted because it tries to follow ethical standards. It is managed by a board that reviews its investments regularly to ensure they follow guidelines on sustainability and human rights. While it still invests in major global companies, which may not always have perfect records, it avoids businesses that clearly go against its values. For example, in 2010, the fund decided to stop investing in 17 tobacco companies because of their harmful impact on public health. In 2008, it excluded the mining company Rio Tinto due to serious environmental damage, including dumping large amounts of waste into rivers in Papua New Guinea, which affected the health and land of local communities. In 2006, it stopped investing in Walmart over concerns about human rights violations. These included child labor, unsafe working conditions, preventing workers from joining unions, and unequal pay for women. The fund also avoids companies that produce nuclear weapons. This is why it doesn't invest in firms like Lockheed Martin and Boeing. Some of these companies were added back to the fund years later, like Walmart and Rio Tinto, after Norway reviewed them again and decided they had improved their practices enough to meet its standards. Norway's sovereign wealth fund doesn't just invest and walk away. It believes that by following strong rules, it can also push companies to be more transparent, ethical, and better managed. And the fund is very active in doing this. In 2024 alone, it took part in over 11,000 shareholder meetings, voting in 97% of them. It also held more than 3,300 private meetings with companies it had invested in. In those meetings, it discussed concerns and asked for changes, like making sure board members actually understand the industry, that they're not too close to company CEOs, and that companies respect the environment and human rights. Of course, the fund doesn't always get what it wants. For example, it still invests in ExxonMobil, a company with a long history of environmental criticism. But even when it can't force change, the fund still tries, and sometimes companies do take its concerns seriously. To make its intentions even clearer, the fund regularly publishes position papers. These explain how it plans to vote on future issues, which gives companies a warning about what the fund will or won't support. It's a way of saying, here's what we stand for. Work with that in mind. Most people don't notice these actions because the fund usually supports ideas that make sense to the public. For example, one of its papers said that CEOs shouldn't get bonuses for short-term gains that don't reflect the real health of a company. Instead, rewards should be tied to long-term success and stability, something that most people would agree with. Norway's influence isn't limited to investing. Thanks to its strong energy industry, the country has become a key player in Europe, especially since the start of the Russia-Ukraine war. Norway is now Europe's biggest energy exporter and is even considering limiting some of those exports to the EU. That said, Norway's rising profits from oil during times of global crisis have caused some controversy. Some critics call the country a war profiteer, but Norway denies this, saying it cannot control how global conflicts affect oil prices. Globally, Norway is the fourth largest exporter of natural gas. As tensions between Europe and Russia continue, Europe's dependence on Norway is only expected to grow. On top of that, Norway's merchant fleet is also a major player in global trade, ranked fourth in the world by value. Norway has also used its wealth fund to take a stand on global conflicts. After Russia invaded Ukraine, Norway's prime minister announced that the fund would sell off all Russian assets. Before the war, the fund held shares in 47 Russian companies and government bonds, worth about $2.8 billion in 2021. It had big stakes in companies like Sberbank, Russia's biggest bank, Gazprom, and Lukoil. Selling off those assets helped weaken the Russian stock market and added pressure on its economy. Interestingly, Norway is also using its massive wealth fund to challenge the very industry that made it rich, fossil fuels. One of its long-term goals is to cut emissions and support the shift to green energy. Norway sees climate change as not only an environmental crisis but a financial risk, and it's acting accordingly. This creates a clear tension with Norway's oil and gas sector. But that's part of why the Sovereign Wealth Fund exists. To take oil profits and invest in a future where the country isn't dependent on fossil fuels. The transition has been gradual but steady. In 2016, the fund asked Parliament to allow it to exclude coal companies. A year later, it began phasing out $35 billion worth of oil and gas stocks. By 2019, it was also excluding companies focused solely on fossil fuel exploration and production. Still, the fund continues to hold shares in companies like ExxonMobil, sparking criticism. Supporters argue it's trying to push for change from the inside. In 2023, for example, it voted against re-electing the CEOs of Exxon and Chevron as chairman of their boards, advocating for a split of power. It also supported proposals requiring the companies to set medium-term emission reduction targets, especially for Scope 3 emissions. The fund argues U.S. companies have fallen behind their European peers like BP and Shell in this regard. That may explain the fund's tilt toward European companies. A 2014 Tufts University study called the GPFG a European fund for Europe, noting that it penalizes North American firms more often. European companies are more likely to meet the fund's standards and already follow stricter EU regulations. This creates a kind of soft power. If you want access to one of the world's biggest investors, your corporate behavior needs to align with its ethics. And this approach is proving profitable. In 2024 alone, the fund earned $222 billion, with a 13% return on equity driven by high-performing tech stocks. With nearly $2 trillion under management, it now ranks among the top 10 U.S. pension funds by value, despite being a sovereign wealth fund. Take government bonds. 7.5% of the GPFG is invested in U.S. government bonds, $136 billion. CEO Nikolai Tangen has warned countries about their rising debt levels, and if Norway ever hinted at selling off those bonds, it could spark real pressure. For now, the fund keeps growing, financially and politically. It's changing the way corporations behave, how governments think about ethics, and what responsible investing can look like. Will it reshape the world? Too early to tell. But now that you know about it, what surprised you most? Let us know in the comments.